What is going on today, guys? Welcome back to the channel. I hope you guys are enjoying your weekend and getting ready for trading next week. I think the overall stock market will be great next week. Now, we are going to talk about the Ortex data as far as the CCIV potential short squeeze here, give you guys the latest of what the numbers are, as well as the main focus of this video is going to be explaining why I think 100% chance CCIV stock will rally after the merger actually happens when we merge from CCIV to Lucid Motors. But we are also going to be going over the recent news around CCIV that makes it pretty much a steal in the EV field. So we're going to talk about everything you guys need to know. We're going to talk about more than that. We're going to touch on the technical analysis, literally everything you guys need to know as far as what is going on with CCIV. Now, I see a great trade here, but I also am invested in CCIV with a large percentage of my portfolio. It's about 11%, so I'm a long-term investor in this as well. And like always, I'm not a financial advisor, so I'm not giving you any kind of advice. Fact check everything I say, take it with a grain of salt. Anything can happen in the stock market, and investing in stocks are risky. But before we get into the information, make sure to tap, tickle, touch, or smash the like button, as well as comment down below and subscribe to the channel. And that is very important to do because a lot of people don't like me talking about any other stocks besides AMC. So if you want more videos like this, make sure to show me that by doing those three things. Now, getting into the Ortex data first, guys, we could see from Friday's changes, and this was actually from the T+2 settlement, so most of this actually happened on Wednesday. We see short interest change of negative 7.97%, return shares or shares that were covered of 6.32 million, additional shares that were sold short of 2.89 million. So that means 3.43 million shares were actually covered on Wednesday, bringing our current short interest percentage of free float, and this is the estimate. Ortex only gets about 85% of the data, brings it to 16.41%, which is still very, very elevated. People are talking about short squeezes potentially in Tesla at a 5% short interest. So hopefully that puts into perspective how high this actually is. And then the estimated number of shares that are currently sold short of 33.96 million. So nothing too crazy there. Days to cover 2.46. Well, I guess that is crazy. I shouldn't say that, but days to cover 2.46. And that is essentially saying if all shorts wanted to cover their whole position, how long would it take? It would take 2.46 days. So that is nothing too crazy right there, nothing to be too worried about. And then utilization at 94.82, and this is out of 100% of shares that could be lent out or sold short, 94.82% of them are, almost 95%. So that is a very, very, very large number, guys. But something I do want to point out, and we're gonna get away from the Ortex data, that is literally the numbers, and I do think they are still severely elevated, and we will see a short squeeze once one of these three major catalysts does come out. But I do want to switch the focus real quick to why CCIV's justifiable valuation has gotten a lot higher recently, and that's why we have been seeing this rally in CCIV, and we will continue to see a rally in CCIV, in my opinion. Now, we're gonna have stagnation times, we're gonna have dips at times, but I do think overall it will be great leading into the main catalyst when we actually merge into CCIV. So I'm gonna give you guys a little bit of the facts of why. There's not too many, but they are huge facts as to why CCIV's justification of valuation is much higher than it previously was only about a month ago, and why I do think we will rally after the merger actually happens, and give you guys a real-time example of another SPAC company that I still am invested in that did this exact same thing, and give you guys the reasoning behind why I think this is going to happen. Now, the first one, and probably the biggest one, is Rivian's potential IPO came in at $70 billion, and they are still a pre-revenue company just like CCIV, and for CCIV to be valued at $35 billion and Rivian at $70 billion, it begs the question that CCIV should probably be valued much higher, or Rivian should be valued much lower. Now, the other part of news, which is also very, very significant, it is Elon Musk canceling the Tesla Model S Plaid Plus, and that was the only other vehicle that would rival Lucid Air with being over 500 miles for a full charge. And that's pretty much all to that. That's what literally gave CCIV about a 5% pop when this did come out, because it puts them in a whole category of themselves. And then Lucid Motors is kind of rubbing it in Tesla's face like they usually do sometimes on their Twitter. It says, let's be honest, it's all about the range. Hashtag Lucid Air, hashtag first to 500. This is the leader of the battery pack projected, Lucid Air projected range, 500 plus miles. So all looks good here. It has been pretty quiet on their Twitter. I do expect one of these three catalysts to be announced very, very soon. Now, I do want to go over now switch gears into why I think CCIV stock will actually rally quite a lot after the merger, and why it is not going to that full rally pre-merger and give you guys the rundown of why this is not happening. So SoFi Technologies is a company I've been investing in for quite a while, and if you see my history, well, you can't see my history because they merged, but you can see the price action that has been going on with SoFi. I've been in this company. I bought my first shares at about $23. I bought some at $25, and then I've been averaging down this whole time, and this was in SPAC mode. This was in SPAC mode until about May 14th, when they announced the actual day that they were going to vote on the merger. Because with these SPACs, all investors, PIPE investors, everybody that is involved has to vote as to if they want the merger to happen. Now, there's about a 1% chance people actually vote for it not to happen and get refunded that base price, which in most cases is $10. In CCIV's case, it is $15 because there was a high demand for the actual company. But SoFi's was $10, and this vote did go through, and the only reason it really wouldn't go through is if the company was at about $10 or even $11 or $12, and people thought that it would tank after the merger, so they would much rather just take their money out, get their money back, and not have to deal with it. But SoFi, like I said, from about May 14th, when they announced the actual merger day, and that was May 28th, you can see this rally from May 14th, literally every day going up in price, up until a little bit of a dip from May 25th to May 26th, literally like nothing, like a 30-cent dip. And then May 28th was the actual day that they did confirm they were going to go public with SoFi, right, with the SPAC that they were using. And then literally after that, May 29th, they did the merger and started the week out as SoFi. Then they rallied up yet again, came down a little bit, and then rallied yet again. So overall, once you do get these catalysts, especially with SPACs, and there's other SPACs too, but SoFi is the most recent one that some of you guys might actually have some background information. Maybe you guys are invested in this like I am, but I do think this is a great example to give you guys of what happens after SPACs. And this thing was $14 before they actually announced the merger vote, and then that's been history ever since. I wish I did buy more. Hindsight is 2020 at this time, but that is not the main focus here. The main focus about CCIV and what I want to point out to you guys is, one, the lockup period. So CCIV and SPACs, they typically have a lockup period in between 6 and 12 months. In this case, there will be 1.2 billion shares outstanding, but the PIPE investor shares and the original Lucid shares will be in lockup for at least 6 months. So a majority of these shares, I believe CCIV's about 13 to 15% of the Lucid Motors actual company, right? You're only getting a percentage, but they just merge into the company. Hopefully that makes sense. Hopefully you guys have some knowledge on that. It's kind of hard to explain, so I don't want to get into that too much, but essentially most of these shares will be locked up for at least 6 months. So you shouldn't see a huge sell-off like you see with direct listings, like with Coinbase. The stock instantly plummeted because those are actual insiders selling shares. Even with IPOs, the lockup time is in between about 60 to 180 days typically. So you have a long lockup period with CCIV shares, so you shouldn't see this massive sell-off either way. But take SoFi as an example. Once you do see these dates be announced and actually confirmed, you're more likely to see some big time players investing in the company. Let me tell you why. And we are actually going to go to CCIV's chart right now. Bear with me for 1 second. Robinhood is pretty laggy. Now, I do have a significant position in CCIV as well, but I do want to point out right now, guys, CCIV shares are backed at $15. So if you were buying CCIV right now, and there's always that 1% chance it doesn't go through, you would lose about 45% of your money if the merger didn't go through, which we all know it's gonna go through, right? It's like 100% gonna go through, but there is that small chance that it doesn't go through. And for institutional investors, if they did not get in at the $15 price, and they really didn't have too long to get in at this $15 price after the rumors started flying, right? CCIV ran up, and then once it was confirmed, came straight back down. And if they didn't get in at that $15 price, they never had a chance to get back into CCIV. And for hedge funds and institutions, whoever is trying to invest in this company, they don't want to take the risk. Even a 1% risk of potentially losing 40 to 45% of your investment in CCIV is not worth it for institutions. So if they put in $10 million, which is a relatively small amount into CCIV, take $100 million. If they put $100 million into CCIV, the merger didn't go through, and they were basically losing 40 to 45%, they would lose $40 to $45 million out of $100 $100 million. They're not willing to take that risk. So it is much more worth it for them to actually wait until this is confirmed and they start trading as Lucid Motors to actually get in on the company. So that is the main reason why investors are basically holding off right now, big time investors, from investing in Lucid Motors or CCIV until the merger actually goes through. And that is why I think the merger will go through. And that is really the example here that I did want to point out was SoFi, because I literally just watched this happen in front of my eyes, so I know this is going to be the case. But tapping onto a little bit of technical analysis real quick, we can see this critical level of $25. We have been maintaining this pretty much the whole time. We've seen little wicks under this, 1, 2, 3, and we're consolidating right here, right above this range. So we have a solid support at this $25 level. If we do break under that to the downside, I don't see why we would, but the next level I'd be watching is about this $24 mark, where we really seen some resistance last time. There's 1, 2, 3 touches, strong consolidation, and then started to rally ever since that. So that is what I would watch as far as the downside. I do want to point out the 50-day moving average. We are currently under that, which sits at $25.81. So that is a pretty bearish sign. That is something I look for in a bearish sign. We seen that during the sell-off. That was June 9th. And once you pass under this, a lot of traders do see that as a bearish sign overall, just like I do. And that is basically what we have been seeing. But once we do pop above the 50-day moving average, which, like I said, is at $25.81, which could be on Monday, it could be on Tuesday. It won't be hard to do this. That'll be seen as another bullish leg up. And then hopefully be retesting these $27 highs. Even if we do go, the sweet spot is $28. If we can rally above that, we will see a lot of shorts start to cover their positions and probably get automatically forced recalls, right? The people that lent out the shares, they're going to say that's too much risk, we want these back. Now, as far as the 200-day moving average, something else I do like to pay close attention to is $23.39. If we do for some reason fall under that, that will definitely not be a good thing. But we had a strong consolidation around here, so if anything, we would bounce off of that. But I think that is way less likely than actually continuing to go higher. As far as the MACD, we are pretty neutral here. We are slightly bullish as far as after hours. Seeing a little bit of inflows, a little bit of outflows, but mostly inflows. Small volume, though, only 21,000 in volume for the after hours. As far as selling volume, 21,000 as well. So it does look slightly bullish, a little bit of inflows, a little bit of outflows, but take a look at the overall outflows, guys. If we could see some good inflows like we seen when we went to about $28, then it'll be very, very good. And we are overdue for some good inflows relative to outflows in CCIV. But the fact we have had these outflows and we have been holding up so well, only slightly selling off, I think it looks very good. And if we can get into this bullish momentum, it won't be hard at all to change this bearish trajectory we have had since the highs. And you can just see this. I mean, it's pretty obvious to point out, but I'll just do a trend line. We've seen this bearish downtrend. If we can reverse right here, I think we will see the bullish uptrend, and that'll be very good for a lot of traders. As far as the RSI, we are creeping up from severely oversold territory, and that's not something I really like to pay too much mind to. If it starts to go up a lot and we continue to go down, that's probably not a good sign. But if we continue to go up and the RSI continues to go up at a slower pace, that is definitely something that I like to pay more attention to. As far as the upper end resistance level, though, I do want to point this out like I do in pretty much every single video. It's going to be at about $27.87. That is the first level of resistance over, like I said, that pretty much where we hit that high, $27.88. That's the first level. And then the next level is about this $30 mark as a psychological resistance level. And then $33 would be our next level. If we do break through this $30 mark, then I think we'll break through the 33 pretty easily. We only had one touch here, so it's not a strong resistance level, but after that we pretty much don't have any other major levels. $36 some would say, because we consolidated for a couple days around here, but I don't think that'll be significant. So we really don't have any other resistance levels to watch past that $30 price point. So I'm going to be watching CCIV very closely. I do have trades in this. I will quickly show you guys. CCIV $30 $30 call. That was a covered call I sold. I'm up about $50 on that. CCIV $40 call for August 20th. I really like this one. And then a CCIV $30 call to play the odds of us getting one of these 3 catalysts in the next 30 days or so. I think it's a likely opportunity, and this one would definitely go crazy. CCIV $40 calls are definitely on the safer side, and pretty much for the same price, and it's only $10 out the money. They're both $163. I think those are great trades. Don't trade anything I trade. That is for the buy and sell alerts, and they are taking that risk as well as everybody else that is trying to copy trades. You may lose money. I know how to trade options. I know when to cut losses and take profits. So with that being said, I am going to wrap up this video. You guys enjoy the rest of your weekend. Make sure to check out the links down below in the description. Until next time, I'll see you later. Peace out.